welcome back to our channel. Today, we're delving into a hot topic crucial for the growth and sustainability of small and medium-sized enterprises, or SMEs. We're talking about the financial hurdles they face and the capital solutions changing the game for them. If you're an entrepreneur or someone intrigued by the economic dynamics, stick around. SMEs are the backbone of many economies, especially in the US. They play a big role in job creation, innovation, and economic growth. However, their journey is often riddled with challenges, the major one being access to external finance to fuel their growth. Traditional finance options like bank loans sometimes remain out of reach due to limited credit history or insufficient collateral. Banks play a significant role in the economy, bridging the gap between savers and borrowers. They offer loans which are vital for SMEs. However, the loan approval process often hinges on a good credit history and sufficient collateral, which many SMEs might lack. The credit score can be a make-or-break factor in securing a loan, and for SMEs, this is a significant hurdle. So what can SMEs do to bridge this financing gap? Enter alternative financial solutions. These include venture capital, angel investors, and other non-traditional lending platforms. Unlike traditional bank loans, venture capital investments focus on the potential growth of SMEs, providing not only the necessary funds but also valuable expertise and connections in the industry. Modern SMEs also leverage intangible assets like intellectual property and brand value to secure financing. They can use these assets as collateral to obtain loans or attract investors, unlocking significant growth potential. As the traditional financing model poses challenges, SMEs are exploring alternative financing options like crowdfunding, peer-to-peer lending, and online lending platforms. These platforms offer a more flexible and accessible way to secure funding, helping SMEs to overcome the financial barriers to their growth. Venture capital is a substantial part of the solution, with investors providing capital in exchange for equity. This not only brings in the much-needed funds, but also often comes with expertise and networking opportunities, propelling SMEs forward in their growth journey. However, it's not without its downsides. Entrepreneurs might have to relinquish some control over their business, a reality they need to weigh against the benefits. Similarly, angel investors provide personal assets to bolster SMEs. They often play a mentoring role, guiding the SMEs through their growth phase. It's not just about the money, it's about the value-added expertise and connections they bring to the table. Online business financing options like alternative lenders and equity crowdfunding platforms are also making waves. They offer a quicker route to securing funds but at higher interest rates. On a brighter note, SMEs can benefit from government programs and tax incentives to foster growth and innovation. The Small Business Administration, for instance, runs several loan programs to assist SMEs. In a nutshell, the financial landscape for SMEs has significantly broadened over the years, with alternative financing options taking center stage. SMEs now have a gamut of resources to tap into to fuel their growth. It's about exploring all available options, understanding the risks, and making informed decisions. The road might be bumpy, but with the right financial solution, the destination is worth it. That's it for today. If you found this video insightful, don't forget to hit the like button and subscribe for more engaging content. Drop a comment below sharing your thoughts or experiences regarding SME financing. Stay tuned for more, and until next time, keep growing!